Mario, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the Fed meeting that's coming up this week and why this guy right here could potentially be crashing the markets even further, considering the May CPI data just came out and inflation is hotter than ever, which you absolutely hate to see. All right, so let's get into it, you guys. We'll quickly go over each of the tabs I want to discuss with you, and then we'll dive into each one individually. We will get to laser eyes Powell in a little bit, but first I want to share the CNBC Pro article with you titled, "Markets expect the Fed will now be more willing to risk recession to fight hot inflation." And of course, you know JP's face is all over each of these tabs, except for TradingView. But anyway, this first article goes over a few of the specifics from that CPI report and why it's probably bad news for the markets. Okay, so we'll kick it off by reading that. We will then move over to this separate article, different picture of Jerome Powell, of course, that covers some of the specifics about the meeting itself and times and dates that you guys should be looking out for, because there is no doubt that this will not cause for some extra turbulence and chop within the markets. Okay, so you got to stay on your toes this week, you guys. It's very important. This is the Super Bowl for macro analysts. All right, so that's that, you guys. After that, we will then move on to the laserized version of Jerome Powell, and I want to read over the macro analysis newsletter that I wrote on Friday. Okay, so in this, we go over just my general thoughts on, of course, this inflationary data, what I think the Fed will do, just the current state of the economy, and I feel probably most relevant to you guys, how I'm personally navigating my portfolio and what I'm thinking about the markets right now, and just how I'm trying to stay safe during these pretty uncertain, pretty spooky times. Okay, so that's that, you guys. That will be right before we dive into the charts. That'll be the last of kind of the macro fundamental analysis, I guess. And then after that, we will dive into the charts, quickly go over SPY and Bitcoin. So S&P 500, king of the equity markets. Bitcoin, king of the cryptocurrency markets. I'll let you guys know what I'm thinking about both of these two in terms of price. And then we'll close out the video by talking about good old silver and gold, shiny precious metals, inflation hedges, safe havens, whatever you want to call them. All the above, I guess. So close it out with silver and gold. Silver and gold are looking especially appealing right now. And on Friday, during all of the market turmoil, all of the market chaos, silver and gold held up very well. Silver and gold miners were performing very well. And I just want to give you guys my thoughts on those and why I'm feeling pretty bullish on those moving forward. Okay, we'll probably do a separate video on silver gold at some point in the future. Let me know if you guys want to see that below. And hey, let me know in the comments downstairs before we start reading if you're feeling bullish or bearish about the markets right now. I know it's very, very difficult to be feeling bullish, but hey, sometimes the contrarian mindset is the winning mindset, especially in terms of trading. So let me know what you guys are thinking down below. Please articulate your thought patterns, and let me know why you're thinking the way you're thinking. Okay, so anyway, again, markets expect the Fed might be willing to risk that recession. And again, you guys, at this point, they kind of just have to do their job. So that's very important to realize right up front. If they don't continue to hike rates at an aggressive pace, they're just not doing their jobs, and that they don't. No one wants to look stupid, right? Especially JP. So some market pros believe the Federal Reserve may be more willing to risk recession with accelerated interest rate hikes after May's hot inflation report. Many economists had expected last month's inflation numbers would be part of a down slope, with the headline inflation of 8.3%, matching April's number before sliding through the summer. But instead, the consumer price index flared hotter to 8.6% year over year. That marked a 40-year high and raised new questions around the timing of the peak and what the Fed will do about it. Quote, "This is what people are going to worry about. 50 basis point rate hikes as far as the eye can see, unless the numbers change," said Jim Karen, chief fixed income strategist on the global fixed income team at Morgan Stanley Investment Management. It's a mouthful. He said investors could even begin to expect a 75 basis point hike if inflation doesn't cool soon. A basis point equals 0.01%. So 0.75% is 75 basis points. Shortly after the inflation report, Goldman Sachs economists issued a new forecast with a 50 basis point rate hike expected for September, in addition to half-point increases this month and in July. Okay, so again, you guys, everyone follow the amount of rate hikes that the Fed was going to implement over the course of the next few months has been a highly debated topic. amongst macro analysts for the past few months now, because it's very, very speculative. But now that this CPI data came in, again, the Dow Jones estimated that there would be a 8.3%. That's who estimated, the Dow Jones, massive analyst firm. They thought it was going to be 8.3% year over year, but instead it was 8.6. That right there is a significant difference, a 0.3% difference from analyst expectations, as well as, again, climbing. That is surprising. That surprised even me. And yeah, it's spooky, guys. So in terms of the meeting itself, the week ahead may all come down to what the Federal Reserve Chair Jerome Powell has to say at 2:30 p.m. Eastern time on Wednesday. Okay, mark your calendars, you guys. Again, this is the Super Bowl for macro, and once again, the contrarian argument is definitely to be made here. Personally, I will likely have some calls on deck just in the case that there is some shocking surprise and the Fed really eases their foot off the brakes with this one. Maybe Biden got into his ear. You know, you never want to go into midterms with the stock market crashing, right? No one wants to be the president when that's happening. So we'll see what happens. This is all complete speculation, but we'll see, you guys. Anyway, Powell briefs the press following the central bank's two-day meeting. The Fed is widely expected to raise its Fed funds target rate range by 0.5 percentage point. But hot May inflation data has made the markets nervous about whether policymakers could be even more aggressive or forecast a faster pace of future rate hikes. The Fed will release new economic and interest rate forecasts at 2 p.m., but it's whatever Powell says about the summer and autumn rate hikes that could help set the course for turbulent financial markets. Stocks and bonds have been volatile on investor fears that inflation may not be peaking and that the rate hikes could cause a recession. So, again, you guys, at this point, I think everyone and their mom can agree that there will be a recession at some point. I mean, that's the nature of the markets. Those are business cycles. There's a recession. There's a defined recession. Again, 2 consecutive negative quarters every 5 years. That's just historical. So there's always a looming recession. It's just a matter of when will that recession come and what will the severity of that recession be, right? So a lot of individuals don't think that this recession is going to be crazy bad, which is kind of the bull case for the markets right now, particularly growth stocks. Just considering the market has already gotten so punished, especially growth sectors of the market. So once again, I'll talk to you guys about price targets for the SPY, because the SPY is the king of the U.S. equity markets. Therefore, the price action of the SPY bleeds into the price action of pretty much every U.S. equity, especially tech and stuff. So take a look at the SPY, take a look at Bitcoin once again. But first, let's read over that Friday macro analysis. Okay. Well, that definitely wasn't the ideal way to head into the weekend, because obviously the markets got punished. Thank God we had puts on deck, saved my portfolio, and hopefully a lot of your guys from imminent destruction. So always stay hedged, you guys. That will be a very recurring theme over the next, as long as the market's going down. Always stay hedged. Even if you're bullish, always stay hedged. Okay, it's the responsible, and again, it saves you from getting cleaned. Again, at least we get a couple of days apiece. So I hope you guys are having a great weekend so far. As you all know by now, the CPI, Consumer Price Index report, was released this morning. It came in even hotter than expected. Anyone who's been buying groceries, filling up their gas tanks, or traveling right now, which is pretty much everyone, could tell you that the inflation is real. But the fact that it's continuing to rise is undoubtedly a massive red flag. Inflation is burning a hole in everyone's pockets, while the US dollar, or the Dixie, is simultaneously becoming more valuable than ever. Cut to the Dixie. Where's the Dixie? Dixie is right there at 104. So that's about as high. That's about as high as the Dixie gets. I mean, it could obviously go higher. We'll probably see it go higher. But again, you guys, the fact that all of this is happening simultaneously is creating for a very worrisome environment. Okay, and I have to assume that Jerome Powell is seeing red. The reason this took such a heavy hit on the markets this morning isn't the inflation itself, but how investors are expecting the Federal Reserve to address this scalding hot reading at their meeting next week. What time is their meeting? 2:30 p.m. Eastern time on Wednesday. Okay, so it's easy on a bloody day like this for analysts to expect the worst case scenario, which is why you're seeing the number as 0.75, which is of course the magnitude of the next potential rate hike, all over the headlines at the moment. It's entirely possible that the Fed will come in guns a-blazing to fight inflation with no regard of plunging the economy into a recession, but we won't know until we don't know if that'll actually be the case until next week. Wednesday, 2:30 p.m. Eastern time. It seems pretty apparent that the majority of investors believe this will be the case, and the markets are definitely reflecting that fear. Unfortunately, no news is no longer good news. No news is now bad news. Okay, right now, you guys, no news is bad news because everything's been trending bad. But over the when we bottomed out in mid-May, it was kind of like earnings were over. This inflationary data, the CPI data, that inflation is still climbing at a pretty rapid pace, is extremely worrisome. And that is an actual curveball. So that is a curveball to, again, what I believed, and I'm perfectly fine with admitting my wrong there. But again, now no news is bad news because now literally everything is trending negative. Okay, there is no longer a silver lining. There is no longer a light in the distance. Just because this is probably going to be. I mean, there's such a minute chance that the Fed doesn't come in hot this Wednesday. So just keep that in mind. Just stay on your toes and once again stay hedged. Okay. So at this point, it's going to take some tangible good news to bring any sense of optimism back to the markets. It could be the Fed meeting next week, probably not. It could be mid-quarter updates from companies saying that things are looking up. So again, especially tech stocks, especially some of these growth stocks that we follow, if they report those mid-quarter updates and things are looking up. I think AMD just came out and bumped some of their year-end targets and stuff, which is obviously good news. That could be a catalyst for upside, for optimism, or the war in Ukraine ending, which is probably the single largest catalyst, considering that is indirectly causing for so much of this inflationary pressure, primarily obviously due to the price of oil skyrocketing due to that war. Until investors have a tangible reason to be bullish, it's likely that the bears will remain in control, which is why our hedges, put options, are still consuming such a large portion of the portfolio. I think it's very possible that we see a bounce in the short term, considering we just fell headfirst off a cliff, but the medium term is now unfortunately looking pretty bleak. We'll dive into bounce targets in the next newsletter. Proper macro fashion, boom, SPY, Bitcoin, and silver. Look at that down below, but today, let's take a look at that in real time. Okay, of course, you guys, before we dive into the charts, it's plug time. So if you guys want my newsletters every single day, write 3 of these bad boys every morning. This is only one of 3. The first is the trade alert. I talk about the trades I make because obviously the base of this is my complete portfolio, the Waves Capital portfolio. So a complete breakdown of every single position in my personal portfolio, all of my calls, all of my puts, how I'm staying hedged, what I'm bullish on, what I think could outperform the rest of the market, price targets, of course, what stocks I'm buying, when I'm buying the dips, when Riot's going to $5 and I'm buying more of that, when a lot of my other favorite plays are going down and I'm buying more of those. I update this every single trading day during market hours. The first newsletter explains the trades I made and why I made them. I rationalize my thoughts for you guys. Second is the macro analysis, talking about what we are seeing that day. That is this bad boy, 2 of 3. And then last is price targets, where I include 4 to 6 charts every single day of the most relevant names to the Waves family that day, and give you guys my price targets and updated thoughts from a technical perspective. Okay, so all of that sounds like a lot, right? It is. I work super hard on it, but it's only $15 a month, $40 for every 3 months. First link down in the description box below. Give it a shot. If you don't like it, feel free to unsub, but I trust you'll be sticking around. Okay, so that's that, you guys. Let's close it out by talking some price targets on SPY, Bitcoin, and take a look at silver and gold. Maybe, I'll take a quick look at silver because I do like silver more than gold. Anyway, the SPY, I mean, when you look at the SPY, you guys, this is a very, very evident series of lower highs and lower lows. SPY, my overall target for the SPY for a very long time has been $360. You can see here as we zoom out that the all-time high prior to the pandemic on February 20th of 2020 was $340 prior to crashing. So we're still well above that. And I mean, considering like ARK Innovation, so growth ETFs, growth stocks are pretty much at pandemic level lows. Like if you look at ARK, ARKK, Cathy Wood's fund, pretty much all her funds actually, because there's multiple. Anyway, you look at ARK, it's pretty much at pandemic level lows, which is insane. Yet the SPY is still floating well above what, like, let's get a price range here, right? Price range. Pre-pandemic high, still 15% off of its pre-pandemic highs, okay? So there's still a long way to go just to reclaim those previous levels back that we saw back in when we saw, I mean, a pretty crazy rally, if you guys were around during this time frame, pretty much fall to winter of 2019 going into 2020, the markets were ripping, everything was looking really good. So we're still well above that in an economy that is objectively much worse. So the SPY definitely could come down. And I do think the SPY will come down. I think a lot of mega caps will come down. That said, I still remain bullish and optimistic about growth stocks because they're getting obnoxiously undervalued, okay, relative to long-term potential. Okay, so regardless, the SPY, I do think the SPY, from a short-term perspective, we probably will see downside here, you guys. The SPY will likely come, retest its previous line of short-term resistance, purple line right here. Use that as new support. I do think that that purple line will come pretty in line with, once again, my initial target, which was the high that we saw in September of 2020 after that massive post-pandemic rally, mid-pandemic rally in the heat of the pandemic, actually. But again, everyone buying stocks, everyone becoming retail traders. So I do think 360 will be the first level to the downside. That represents, that would represent about a 7%, 7.5% move down from current levels at 390. But I do think that in the very short term, we will see this red line tested right here. That is current support on the short-term descending channel. Touch point. You could say touch points around here. So I do think that the SPY will come down to about 370 first. And we'll probably come down to 370, bounce, and ultimately make our way down to 360 over the coming weeks. Again, unless Jerome Powell, there we go. Unless the Fed does come in clutch, okay? Not with laser eyes, unless you extinguish the laser eyes. So that's the SPY, you guys. Take a look at BTC quick, and then close it out with silver and gold on a somewhat of a high note. So Bitcoin, it's tough to say that Bitcoin is looking good here, you guys. Again, obviously Bitcoin in a very, very evident downtrend from its all-time high back in November of 21, just over 6 months ago. It's crazy how much has changed in 6 months. But since then, we have seen a correction to Bitcoin's current levels of about 60%. So a 60% correction from its all-time high so far. Right now, I will say on a brighter note, especially considering Ether and altcoins are getting ravaged right now, which is a very, very common theme in winters, right? A lot of capital doesn't convert back into USD for kind of shady reasons in the crypto markets. You kind of just swap around between coins, and right now you can tell a lot of altcoins are just being converted to Bitcoin as kind of that safe haven asset. So Bitcoin, on a brighter note, is actually holding up pretty well in the macro volatility. It's not just falling off a cliff, even while like a lot of the rest of the market fell really hard. Bitcoin has found a real strong base here around 28,000, so that's good. But from a macro perspective, I do think 20,000 is possible. I do think $24,000 is highly likely. So I do think that 24K is the bottom. 20K is obviously entirely possible, but personally, I think we'll spend the far majority of time before the next bull cycle, probably in 2024, next halving, between 24,000 and 28,000, trading sideways in a very boring range prior to things picking back up. Okay, so that's just my 2 cents. Could obviously be wrong, but from a short-term perspective, could get pretty bullish in the case that Bitcoin breaks short-term resistance right here. So April, boom, April high, touch point, creating the line of resistance, retested over the past few days. If Bitcoin at this point can break pretty much back above, just to play it super safe, $31,000, I think we will come to test overall resistance, which is this cyan line right here, and just say June 25th, just where the cursor's falling. That'll take us to about 35K to test overall resistance in the scenario that short-term resistance is broken. Okay, so that's BTC. Let's close out with silver and gold. Again, gold. Let's take a look at gold and close it out with my MVP silver. Wow, my gold chart looks crazy. It's been a while since we covered this, but gold, you can see here, is in when you just zoom out, gold is in such an obvious series of higher highs and higher lows in a long-term time horizon. So gold, although it's boring, gold has historically performed very well during recessionary times, during economic downturns, and I'm pretty damn bullish on gold, to be honest. You can see here, kind of printing this, pretty much just range trading. So, it would honestly make sense for gold to make its way back up to all-time highs and potentially break its previous all-time high, especially given the fact that the economy is not in shambles. Okay, so silver, I like silver more than gold for the same reason I like Ethereum more than Bitcoin. It's more exciting. It sees greater levels of volatility, and if you catch the momentum correctly, you make more money. Okay, and that is my job as a trader. Okay, so silver, way below its all-time high. Silver's all-time high was like $60 back in 2011, over a decade ago. So silver has a lot further to climb simply to reclaim its all-time high. And silver right now is printing what looks to be my favorite pattern in the game, and that is a bull flag. So parabolic move up followed by this descending triangle. Silver is currently just floating right around the base of this descending triangle. And silver, I mean, just you have to expect that silver will probably make its way up, given like all things considered, to test the top line of resistance on this descending triangle. Okay, that would take us up to about $26 or plus 20% from current levels. And in the case that we do start to make our way up like that, and again, given everything, every other factor, I do think it's very possible for silver to finally have its time to shine. If you've been around for a while, you know that silver has broken our hearts many times in the past, but I think she might have changed this time. So we'll see if silver can come up here. I do think a test of resistance over the coming month is highly likely. Of course, if silver's doing well, silver miners, kind of like Bitcoin versus Bitcoin miners, if Bitcoin's doing well, Bitcoin miners are going to see 2x, 3x the volatility that Bitcoin's seeing. The same applies to silver miners. So once again, if you guys want to know exactly how I'm trading calls on silver miners, what my favorite silver mining positions are, first link down below. But yeah, I'm excited to see what happens with silver. And hey, if we do break this resistance, if we can break out of here, that gets super, super exciting. And I'd honestly be pumped to see that happen, because there's always a bull market somewhere, you guys. Even if that bull market is boring precious metals or shorting stocks, there's always a way to make money somewhere. So stay engaged, stay involved, don't get cleaned, and I'll talk to you guys soon. Okay, until next time, always remember, take action, make waves. Peace, team.